Some people say that layer 0 is type of a bridge. So the definitions there are quite difficult.
We're sitting here talking about how they don't have a big differentiator, but that actually is a very big differentiator, isn't it? We got guys like Cardano sitting on the sidelines and XRP on the sidelines.
Yes.
That was 4-year vesting. So yeah, you don't even get a single token as an investor for a year. And then it takes 4 years to get all your tokens. We might be through a couple more cycles by the time that comes around. So that's probably what Patrick likes, seeing that he likes the longer vesting.
So to have this kind of duality is very powerful and allows for a lot more use cases.
Guess first things first, what is Venom? And maybe what differentiates it among the other projects that are like Venom in the space?
We did the infograph, right? So actually I can share that quickly and just explain what I really like personally. So the infograph, the way we developed this is basically, the main thing is, of course, the Venom chain. And I forgot exactly how the architecture is, but they have a couple of main chains that are processing all the basic transactions. And then very similar to Polkadot, it's a multi-chain kind of architecture where other projects can build chains on top of Venom, which can either be public or private. And that's a very interesting architecture. Just like Polkadot, these projects are interoperable. So you could have a private chain from a bank, for example, that has data privately on here. And then you can have a public chain that might be some kind of online e-commerce product or something like that. And then the data can flow between this private and public chain. And that's a very powerful infrastructure, because previously the big problem with blockchains was that they were anonymous, but they were not really private. And as soon as an address, then it's very easy to basically track someone's every move. And if there were private chains, of course, but then the private chains are not really decentralized and they lose all the benefits of the blockchains to begin with. So to have this kind of duality is very powerful and allows for a lot more use cases. Now, what I found pretty cool is obviously the multi-chain that's similar to Polkadot allows this project to scale horizontally, meaning that potentially hundreds of chains can be built on top, and that can serve millions of transactions per second cumulatively. Again, similar to Polkadot. But what they have on top of that is that every individual chain also has a sharding built into it, which is scaling vertically. So the way that works, and we explain that down here, is that it's quite simple that I'm just making it up now, the numbers, but basically if a chain, let's say has 100 transactions per minute, right? And that starts to become too much, then it simply duplicates itself. And then the duplicate chain, both of them will basically take 50% of the transactions that they process. And then if the load increases again, that can happen again and again, and more duplicates can be created. And then if the load decreases, these chains simply collapse into each other again. So it's like double scaling. Once it's multi-chain, and then on top of that, each chain scales on itself. So it just feels like a lot of scaling going on. So that's the scalability. All these chains are interoperable with each other. And then on top of that, they are launching this Venom Foundation, which together with Iceberg Capital, right, they have a $1 billion venture fund, which they can use to invest in projects. So that should help really the growth of the whole thing, of course. And finally, they are focusing quite a bit on compliance. They're apparently the first blockchain that has a license in Abu Dhabi, and they say they are compliant with international laws. So this is just an overall view why I think in itself, I don't think that any of these technologies are new, right? So that I don't think that they have innovated something like Ethereum brought smart contracts, or Solana was the first to really have proof of stake, right? So I don't think they have a major killer feature like this, but they took all the best features that are out there and assembled a really nice solution. And I think that's topped off. That's something I say in my review, which actually is down here, right? I think they topped it off with a very nice white paper that is very easy to understand, explains all this stuff really nicely, which is very rare in the industry. And from what I read from the other reviews is that testnet is actually one of the best experiences they've had. It's very smooth, it's very high quality. So that's why, for me personally, my comment about Venom is it seems to be a project that's very well implemented, has taken the best technologies that there are, and it's just delivering a very good product. Those are my positive feedback on it. So I'll let someone else go now, and then maybe I'll also mention some of the negative things that I've personally seen on the project.
So, all right, let me move a little further down that path, Mark. You talked about the interoperability among itself on the chain, which kind of seems like a no-brainer, right? The chain should work with itself in all capacities. Is there anything mentioned about its interoperability with other chains? Will they have to build on top? We've looked at a lot of these layer zero solutions lately, and how they conquer it. Did they address anything there?
Yes, so here's actually where my first critique of the project comes in. Okay. And that's a little bit with their marketing. That I had quite a few things that I find questionable. First of all, they're calling themselves layer zero, and I don't think they are layer zero, because they actually require, from what I remember and as much as I researched, they require bridges to connect to outside networks like Polkadot, Ethereum, so forth. And at least according to my personal definition of layer zero, a layer zero connects outside chains without a bridge, right? With different mechanisms than a bridge. Some people say that layer zero is type of a bridge, so the definitions there are quite difficult. But yeah, I would call Venom a multi-chain and not a layer zero. They call themselves a layer zero. I think that's up for debate.
Yeah, at least from our conversations last week, talking about layer zero and some of the other layer zeros out there, I think if you want to say you're not a bridge and you are a layer zero, it might imply that you've got a smart contract on both sides of the chain. On the native chain and on Ethereum, you would have a smart contract there versus only having it on one side of the chain. But okay, interesting. I think it's a very loosely used word as well, layer zero and what's a bridge. But tell me, does anybody know anything about the consensus mechanism or mechanisms for this?
Maybe we quickly pull up the actual reviews, right? Okay, so we have Nima, of course, who brought up the project, and this is the most upvoted review. And I think he really just summarized that it was a very good testnet experience, one of the best he had. And he explains how, that there most likely will be an airdrop, and this is how you can qualify for that airdrop. Then we've had IGG who complemented the marketing for just a lot of activity going on with 220,000 wallets created, 69 million transactions, so forth. And that's also something that impressed me a lot. There's just a lot of action already going on before launch. Here, this is what we already explained, right? Technology around it. Patrick, sadly, is not here, so he cannot comment on the tokenomics, but it's quite rare to have him rate the project 4 stars. Yeah. So the foundation has a 72-month vesting. That's even better in long term. So yeah, there's quite heavy vesting here.
I could speak to that because I did look at their tokenomics. I didn't write about it, but
yeah, why don't you do that?
Just one of the reasons why I didn't get involved with it at the pre-sale level is because the vesting was absolutely in favor of the project, a little too much. I believe it was a 1-year cliff and 5-year vesting or 4-year vesting. I was 4-year vesting. So yeah, you don't even get a single token as an investor for a year, and then it takes 4 years to get all your tokens. We might be through a couple more cycles by the time that comes around. So that's probably what Patrick liked, seeing that he likes the longer vesting from particularly the team and everything, but not just the team.
Maybe then we are ready to look into one of the flags that I at least personally had.
Did we know what the consensus mechanism was? Is it proof work, stake?
I think it's proof of stake. I focused much more on, for me personally, on how the scaling works and all of that. I'm pretty sure it's a proof of stake chain.
Was there any other mention about this fund? Because I've seen that a lot of times where projects boast this big fund.
Yeah, so there was quite a critical review on the fund. I can pull that up.
And I'll pre-queue my next question while you're dialing that up. I just want to get everybody's thoughts on these layer ones that have these massive airdrops, going back to that activity you showed. Maybe get a few opinions of what they think or have seen with other layer ones that have done that.
I personally see more airdrops around usage, where you just set up a wallet or send tokens from a faucet across somewhere and be testing it, really. I think those are more valid than just dropping for the sake of it, to have some people actually contributing to the project and giving feedback and that sort of thing. There's earning their tokens. So it's not really, in my mind, it is an airdrop, but it's more of an earned airdrop. So I'm seeing more and more of that from these bigger projects.
Yeah, I can't remember who it is, but I remember recently was looking at one airdrop where the highest consideration was the age of the wallet that you were using to interact with for the airdrop, creating this, bridging that, minting this, so that they would attempt to weed out all of these people that do this with thousands of different wallets programmatically. That is where that stat was 200 some thousand wallets already on a test net. That's a lot.
Yeah.
So I think this section here is obviously wasn't able to confirm that, but that obviously he makes a good point here that they said despite this sizable funding, he says that Venom has only completed 2 deals since the fund's inception, both of which were potentially executed prior to the official announcement. And he says this raises concern about the level of interest in the network. So yeah, he shows there's only 2 projects that this $1 billion fund has invested in. Yeah, that does raise some questions. What do you guys think about that?
I hate to be pessimistic about things, but I see a lot of times in certain launch pads, they've got these incubation funds, and it doesn't ever feel like that those are very transparent where those go and how they're spent, et cetera. So I was just wondering, $1 billion is a lot of money. It's a big carrot out there at the end of the stick to lure people with. So just who controls it? Is it controlled by a DAO? Is it just controlled by a handful of people in the project? Those would be some of my concerns as I was looking into this.
Yeah. Chris, do you want to say something about the project?
Yeah, certainly. Like you say, they're operating in a very competitive space, but one thing that I will give them credit for that maybe could work in their favor is the foothold within the Middle East. Obviously, this has now become one of the crypto hubs. So the fact that they have that Arab money, as we call it, behind them could pay dividends. And if they can make themselves renowned in that region, obviously they have the legislation or from the Abu Dhabi Financial Authority people. They suppose obviously a lot of projects just go deep in head first without even looking too much about the compliance legislation side. So it's good that they've got this stuff figured out already. So give them credit for that.
Was there a primary use case for this?
Yeah, well, using the test net as well, because I remember now actually using it for the airdrop when he said it. I remember doing it after he said it. I remember everything worked well, but I remember nothing stood out to me as, oh, this is some revolutionary. They've not reinvented the wheel in any way, shape, or form. It worked well and it all seemed good, but it was nothing like stood out to me as, oh, this is very different to this project or very different to that project. I do remember like having that feeling when I went through the process of doing the stuff potentially for the airdrop.
Yeah, I mean, they do mention in their white paper that they feel the crashes of kind of 22 showed that it wasn't that the technology was working. There's no issue with the technology, but there was issues with compliance and the legal side and all of that. So that's why they seem to have made a conscious choice to use what is out there, the existing technology, do that really well, but then put it into a regulatory compliant setting.
We're sitting here talking about how they don't have a big differentiator, but that actually is a very big differentiator, isn't it? We got guys like Cardano sitting on the sidelines and XRP on the sidelines.
Yes, but you know, in my opinion, there's a big but, because the UAE has very, very, very lax regulations. And at least in some of our fundraising activities, actually the EU and the US have special regulations for residents in the UAE because we need to do additional KYC and AML activities with people from these areas because the government doesn't do it properly. And they are working together with, I forgot what that clause is in the EU and in the American and the US laws, but they are working together with the EU to try to clean up some of these things with their banking system and all these money tracking things. It's not being compliant in the UAE.
Doesn't have the same weight.
Yeah, it doesn't have the same weight as if we have been talking to, I've been on a stage with someone from, I think it's called Soma Finance, and they are in the US. He's based in Korea, and I think they work something, but the chain is in the US. And they've been working with for 2 or more years with the US government to find a legal way to raise funds with retail investors. And I think they have maybe launched now, but it was a few months ago that I talked to him and they were just about to launch. So they are basically saying that they can do regulatory compliant fundraising in the US, right, to retail investors. And that would be quite a higher kind of ask than basically. However, on the other side, I actually don't know. We wouldn't have to ask Sahil about a lot of this. They do say they're the first to be licensed in the UAE, so it does matter maybe more. One thing that threw me off a little bit is they say they are compliant with international laws. And that's a very strange thing to say, because I don't think there are international laws, and the laws around crypto are very difficult around the world, right? All the different regions have different laws and regulations. So I'm not sure what it means to be internationally compliant. So that would be good to get clarification on, basically.
Yeah, I would say to that, I'd get 2 points. One, or maybe 3 points. First one, I agree with you about what it means to be legal in the UAE is obviously a lot looser. But I think, then on my second point, I think that's what's fueling this narrative right now with Hong Kong and UAE is the lack of enforcing all of these other more stringent European and US-based regulations. And bringing it to the third point, and just a graphic that I posted recently, there's apparently 260 million out of the 420 million crypto users are in Asia area. While it may be lax, they certainly are the biggest market. And so I think they have that going for them as well.
Yeah, interesting project to follow. Yeah, I do want to mention that I can show another review here. A couple of things that threw me personally off a little bit. Some of their marketing stuff. So that's why I personally ended up rating it 2 stars for marketing. Ooh. I rated 4 and 5 stars for idea and technology, but marketing. So this was my biggest issue here. So they have a YouTube channel and they have 50,000 subscribers and they have less than 50,000 views. And I just scratched my head. I don't know if I got the channel wrong, but I'm pretty sure this is the correct one. And it just shows to me that they're maybe buying the traffic. On Twitter, for example, they only have 3,500. So this is just a very strange thing for me to see, and just makes me skeptical about some of the other numbers out there. And then actually a bonus that I would have gone back up to 3 stars is because I really love it when projects have charts, activity charts like this. And theirs is really exemplary. You can look into any kind of date. So I think this should be standard practice for every project, and only like maybe the top 2-3% of the projects have this. So this definitely will give them some more. But then I went back down to 2 stars because they're saying that they're layer 0. And when they talk about interoperability, they say this, right, that this allows for exchange of data and assets and value between work chains in the ecosystem without third-party bridges. And that means, to me, that they are a multi-chain and not a layer 0. So I think that's, maybe they don't agree on the definition, but I find it slightly misleading, or maybe just taking advantage of buzzwords. So that's why I'm quite cautious on the marketing side. Do you guys think I'm being too harsh on it, or?
No, I think you're being reasonably critical. These are good points to make. I definitely agree with the subscriber stuff. That looks fishy as hell. And also, like you say, these kind of things have knock-on consequences. Like, you're now going to question, is this figure real, and all this kind of stuff. Yeah. So I think they're valid points to make.
I do take the point that somebody made, I think, that about maybe there's a Gleam campaign or something like that.
That's what we're going to ask.
Yeah, there could have been a campaign where people have to subscribe to YouTube, but they don't actually engage. So I'm not sure about that.
Chris, you said you went through some of the airdrop tasks. Was there anything related to subscribing to their socials?
Yeah, actually, or mainly the Twitter and the Telegram. Was there a bit? Yeah, I can't remember if there was a bit for the YouTube, but there definitely was for the Twitter and the Telegram.
The strange thing is that Twitter only has 3,000, right? Yeah, so this is it, right? They've got their 11 videos.
Yeah.
And this is the only one, 16,000 views, right? It's not listed on their website. which again, I think people should list all of their social on their website, at least a well-developed project like this. That's it from my side on Venom. I don't have that much more on it. I mostly just looked into the tech and mostly the multi-chain versus the sharding, and I find the sharding quite interesting how they do it. I really like their white paper a lot. Definitely give them kudos for that.
Yeah, and you've probably read 500 of them in the last 8 months, so that's pretty good endorsement as well.
I read a lot, and it's very rare to come across a project that has a readable. I think the other one was maybe Near, which is pretty good.
Yeah.
Cosmos is very difficult to understand. So yeah, quite special.
Okay. All right. Unless there's any more questions, we'll wrap up that roundtable on Venom. Thanks for the presentation, Mark.
Thanks a lot, everyone, for everything.
All right.
And then see you guys soon.
Cheers, guys.
Thank you.
Bye, everyone.
Bye.